Hello everyone, today we are going to talk about the price of gold and if it's actually worth to invest into the gold or precious metals, partially the gold. So if you look at this chart, we will see that in March 2007 the price was a little bit higher than $600 per ounce, which is a little bit less than 30 grams in metric system. And over the 10 years, it's actually doubled and become a little bit more than $1,200. So it kind of seems as a good investment. However, if you want to take a look and see how much it generates per year from the, how many interest points, 10%, 5%, etc., we have to calculate and see how much it actually generated. So let's do a simple calculations here and we will see how much it actually generated. So if you take a look at this chart, it says the number of years and it's for 10 years because it doubled for 10 years. And 1.075 actually will be equal to 7.5% per year if you think about it numerically. So what we should do, we should take 1, which is 1 represent 600, just number 1, and we have to multiply it by 1.75 of all these numbers 10 times. That's what I did. Basically 1 multiplied by 1.75 10 times, or you could do power 10, doesn't really matter. So we came to the 2.061 number, so it's a little bit more than 2. And if you take the price of $600 per ounce of gold, which was 10 years ago, and multiply it by this number, which is 10.06, we will arrive at $1,236.61, which is about the price of gold per ounce in today's dollars. So definitely, yes, it's multiplied, it doubled up. However, it grew only by about 7.5% per year, and it may seem a lot of money. However, it's good, and it's only good when we compare it to the growth that could be achieved by investing into something like just regular mutual funds where you don't actually hold actual gold. And let's see how much the actual mutual funds are generating. So here are some examples from my previous video, and it will be talking about the formula that generates the predicted interest rate, and it will be telling you how much return actually happened and how much I am predicting. So let's compare this 7.5% that will be produced by your gold holdings to the one of the best index funds on the market. So if, for example, you compare to, I don't know, the lowest one here is, I believe, this one, which is 8.01% for PowerShare, DWA Utilities Momentum. Even the lowest in the best index fund generate more than this. And then they keep increasing. For example, this one for Guggenheim S&P 500 EW Technology ETF generated whooping 9.58%. It's getting closer to 10%. Another one is 10.9, 10.13, and more than this, all around this number. And actually the best, the ones that I actually described in my previous video about index fund or PowerShare Dynamic Semiconductors, I believe, generated a lot more, which is 11.82%, which is, I believe, like what, almost 4%. When you compare more than actually than 4%, we could actually calculate it right here, how much it is more when compared to the growth in gold, which is 11.82 minus 7.5, oops, sorry, minus 7.5, which is 4.32% here. So it's much more than what is achieved by investing into the gold. And some people really like it because they say, yes, I invest in gold and it feels good. But let's talk about it and why is it may feels better and why in real life it's not actually better. First of all, if you're going back to the price of gold here, you could see that price per 30 gram, actually 28.5 gram, I believe it's 1 ounce in metric system, is $1,200. They also use troy ounce, which is 16 grams per ounce, or 1 oz, as we say here in America. But let's say we use metric system for now. So 1200 multiplied by 28.5, hold on, let me see, will actually means a lot of money. If we do it the quick way here, we arrive at the number of $34,200. And I'm not kidding, it's a lot of money right here, this number. So if you want to invest in some bar which about the size of the, your cell phone, like smartphone, you actually have to, cash out $34,000 and $200. So it's actually a lot of money. So one may say, okay, I will invest into the coins. Because it's smaller, you may pay $1,000, $500, maybe even $100, depending on what you're buying. But remember, you're not just buying weight, not just like that weight. You're actually buying coin, and it's actually has like art in it. Old coin, modern coin, whatever it is, you're actually paying much more, probably several times more than if you were just buying just pure gold, just by weight with serial number and bar number in it, like the one that exist in Federal Reserve, So one could actually say, okay, I don't have this much money, but I want to invest my 1,000 or my 5,000 into the gold share. And by investing into the gold share, you just basically buying paper, which say, okay, this is how much you invest, and you basically will get the same interest. And the actual gold will be somewhere in a safe location. So you don't have to buy big, bulky safe box for your home, or buy that safe lock in the bank, and then you have to buy the insurance, because sometimes banks get robbed and jewelry and physical belongings are getting robbed. So if you don't have insurance, then it'd be all gone. So, but even if you buy, just a paper share of gold, you still only having that 7.5%. So it's, for me, it looks like much better than if you invest into the PowerShare Dynamic Semiconductors Index Fund, which generate 11.82%. And some people, like preppers, they say, well, yeah, it's gold. It's like, it feels better to have it. If something happens, I don't know, apocalypse happens tomorrow, you only have paper, and nobody like paper, and you don't have much money left, but gold is good. However, if you look into some countries struck by tornado, tsunami, or whatever, where economy is kind of in a collapse, at least for some time after the, disaster happened, what we see is that still it may not be that much of value, because what is mostly important after this disaster happened is like food, shelter, and, maybe some clothing that you should have on you to keep you warm and nice. And gold probably could buy you some goods and merchandise, but probably not that much. If you invested and pay, let's say, $1,000, you may buy maybe worth of $100 or maybe more, because everything will be in short supply, and the supply and demand economy will be actually screwed up when, some disaster or apocalypse happens. So going back, it's probably not very wise idea to invest in gold now, or even if you feel you could have it for some, bad scenario happening in the future. So my recommendation is still will be to invest into the mutual fund, something like index fund, where they have very low, expenses from the, administrative expenses point of view, and they don't have much of aggressive investment. They just replace the index, just like I described it for you in the previous lecture. So once again, this was my point of view on gold, and is it worth to invest in gold? And I talk to you later, and see you in the next video. Have a nice day. Bye.